Almost everyone in crypto markets is looking for that next crypto gem that will make them 100x. Some of the people even joined the industry because of that. Well, actually, knowing where we are in the current market cycle is way more important. Because if you invest into the best possible coin at the wrong time, you will experience unrealized losses for a while. While if you find the worst possible coin at the right time, it will make you some gains. So I found one indicator that aggregates few others and is showing pretty good results if you look at the previous market cycles. So that's the expectation for the future as well. Stay tuned. Hello everyone, I'm Željko and welcome to Crypto Grid. So around 80% of you who are watching this video are not subscribed, so if you find some value in it, please consider subscribing. Thank you. If you look at crypto market, stock market, or any other financial markets in general, usually the expectation is that when we are in an uptrend, that the trend will continue. When we are in a downtrend, the trend will continue as well. And finding these tops and bottoms is probably one of the most difficult things to do, and it's pretty much impossible to find the exact tops and bottoms, but we try to use different indicators that will help us on this journey, and none of them is like 100% accurate. And even the worse, when the more people are using the same indicators, and if the whole market would follow one indicator, it would become less and less accurate. I feel that the more time that we spend in the markets, that indicator that we like to use primary changes over time. And initially when I started, I tend to look more at things that are more short-term oriented, while as you're evolving, as your portfolio is growing, usually you want to be more focused on a longer term, because you realize that you invest less time from one side and you get higher earnings and you become less frustrated, and like there are many benefits on looking at the markets in a long term. And also it's much easier to assume where the price will be in 1 year in comparison to 1 hour. I don't mean in the percentages, but if you look at long enough time frame, usually the Bitcoin price is going up, right? And if you look into the short time frame, you don't know if the price will drop, let's say, from 70k to 60k, or it will just skyrocket to 80k. Also, what I noticed is that so many people are looking for the next coins that they should buy, but they are not looking where we are in the market cycle. And you should always look from the perspective that if we are close to the top of the market, you don't want to be exposed to like super risky stuff, because if the Bitcoin price starts going down, these things will like have 90% plus drawdown, and it's something that people often don't look into it. They are often just looking at a potential upside instead of looking at what could be potential drawdown. So the indicator that I found and that I think that it performs really well is called CBBI. It's created by ColidTalksCrypto. He also has a YouTube channel. Make sure to check it out and follow him. And the developer side was done by Kamil Monic. Apologies if I haven't pronounced it correctly. So if you look into that indicator, you can see that it's contained of 9 different indicators. For majority of them I heard and I know how they work. For the last one I haven't heard. One of the things that I noticed is, for example, if you look at R-hodl ratio, is that he already accounted diminishing returns into indicator. And that's why this number is 100%. So you can look into each of them separately. I don't want to go deeply into them. I think the choice of the indicator is pretty good. The thing that I would like to see, for example, also added is maybe predicted funding rate and open interest. Some people suggested Google Trends, but this is mainly based off on-chain data in conjunction with some tools that are just looking at moving averages. We can always debate whether all of them should have like equal distribution. He allows you pretty much to select if you want to include or exclude something. The whole project is open source, which is really nice, and we should all appreciate it. And if you want to donate, you have a link at the bottom of his page. And no, again, it's not paid review. I just found this indicator and I think it's really valuable for everyone to see it and to know what he's doing here. Me personally, I always like to look at MV/RV score, and I like to look at rainbow chart of Bitcoin, and I think this is really good. I think he should adjust this one as well to the second one, which also includes diminishing returns that are expected that we in the each market cycle we reach one line lower. So pretty much if we were at orange, so this one should be at yellow or light green, for example. Again, all these things are debatable. In the last video, he also shared his exit strategy, and as you can see here, pretty much it's time based and not price based. Pretty much he's selling 2% of his BTC starting at April per week. I would also like to hear his thoughts. Why is he picking this? You can deep dive into his content more if you like it. I personally like the transparency and I like analytical approach. So let's look at the indicator. Pretty much here he marked halving days with the purple, he marked the highs with the green, and he marked the lows with the red. Usually the highs were around like 15 to 16 months after the halving, lows were around 17 months if I remember well before the halving. Important thing to notice here is if we look for example at P, top cycle indicator, it was really accurate in the past, like the lines crossed around 3 days after the top or something like that, and that should be the indicator for the market top. But in my opinion, this indicator is too much time based, and now based on the current price, my assumption is that this market cycle will be much shorter in comparison to the previous one, and this is the reason, for example, why we shouldn't expect this indicator to reach 100%. And you can see that it's one of the lowest when we look at the numbers of other indicators. So looking here, you can see that the indicator is oscillating between 1 and 100. And if you look at low, these levels are like around 8. If you look at this high, the levels are around 99. So it's really well calibrated if you are looking at the average numbers. And if you look at the current number is 82. Which pretty much means that we are approaching to the top. Yeah, there were some times, for example, last market cycle we had a double top, and the second top looks much lower in comparison to the first one. And I'm not sure if we can call it a divergence. It's something that I would like to ask him as well. But in general, if you would stick that you buy at areas below 10 and that you sell at areas above 80 or 90, you would perform really well. Me personally, I prefer to buy and sell based on price more than on time. Yeah, it can often happen that you sell much earlier or maybe that you hold more assets than you initially expected, but in the longer run, if you base it on time, the price can normalize. Like after a huge jump in price, you have a small pullback and you would be selling maybe at that pullback, or in the opposite scenario, when we have a sharp decline in price, then the price goes slightly up again and then you're buying at that rebound. Still, these things are highly dependent on how active you want to be during the market cycles. Do you just want to come and accumulate during the bear market and just sell when we're close to the top? Or you want to like sell at one point and accumulate more on a pullbacks? It's something that I'm doing, and also depends on the size of your portfolio and your willingness to accept higher risk with maybe some alts and things like that. There are multiple ways how you can utilize this. As I said, you can just accumulate more assets when we are below 10 and sell when we are above 80 or 90. You can accumulate as soon as we are below 40 and start selling just as we are above 60. This really depends on you and what you believe how the future market cycles will go. I expect this one to be shorter, as I said, and I expect that we have smaller drawdowns in comparison to the past and that we have less sharp increases in price as well. Maybe this is the last market cycle where we're gonna see like a sharp increase in the future. I don't expect that we see each time more than 2x in comparison to the previous market cycle. So regarding this indicator, you can check it at ColidTalksCrypto.com. I will leave the link in the description below. So one of the things is that you should definitely look into which indicators he is considering when we are looking at it. Some people suggested to add Google Trends as well. I'm not sure what's the reason he didn't add it. Maybe because Google Trends data is not that accurate, but I'm not sure. I hope that you like the video, and I hope that I will manage to get in the conversation with Colin about some of the things regarding the indicator. So thank you for watching, stay strong and healthy. Bye.